Very, very volatile week. I hope you've been the right side of what's going on. Huge moves. Obviously, main event of the week so far. Well, I'm saying so far. Certainly, main event of the week has obviously been the Fed decision and the very hawkish tilt that the market has taken from what the Fed said and what the Fed didn't say, and also from what Jay Powell had to say in his press conference. So, dollar's been much, much stronger since then. And we're up at some significant levels. Obviously, stock markets have taken a whack. We're in our fifth and sixth day, in some cases, under the key 200-day moving average for the main US indices. And yesterday, and obviously, we're also in the middle of earnings week. What an earnings week it's been as well. Massive. Huge revenue numbers from Apple last night, 123 billion, I think it was, just for that first quarter of their financial year. So huge hit there. Tesla got whacked by over 11% yesterday. Robinhood, I don't know if you invested in Robinhood, but they were down 6% on close yesterday. Netflix bounced 7.5% on Bill Ackman's investment in there. So lots and lots going on. Major news today is the PCE, the price index. Remember, this number is the Fed's preferred measure of price increases, or the preferred measure of inflation, not CPI, but this PCE number, the price index accelerator, that's going to come out in a couple of minutes. So, actually, I haven't got I said all that. I haven't actually got my calendar up here, so let me just open my calendar. Do as I say, not do as I do, as they say. So let's have a look. Here we are. There we go. So price calendar. Here we are. Let me just share it with you here. So let's have a look at that. Let me just minimize myself there. So this is what we're looking for. The PCE number, this price accelerator number here. So lots of numbers within that, but see how this comes out in the next few minutes as the numbers roll over. So I say we'll be watching that quite closely. Last big data point of the week. We've also got the University of Michigan later on. Obviously, the weekly CFTC positions as well later on in the day. But certainly, where's the University of Michigan gone? Wasn't on there. I'm sure University of Michigan are out today as well. But anyway, interesting data from earlier on today. We had a surprise beat. It's not actually on this particular can here, but we had a surprise beat for French GDP. We also had quite a big miss for German GDP for the fourth quarter. For the final reading for the fourth quarter came in at minus 0.7 of 1% from minus 0.5 of 1%. And so lots going on as ever. The other key thing, though, from the inflation point of view, was that German imports were much weaker than expected. So whether that's a reflection of they couldn't get the goods, but certainly the inflation on the German imports was much less than expected early on. So the PCE number's just about to come across now. I'll leave this on and we'll get the charts up in a minute. But good afternoon, everyone. Hope you're well. Fatu, good afternoon to you, my friend. Calvin, what's Calvin saying here? Does Hot Forex have an app? Absolutely, Calvin. Go to either the App Store and you'll find it there. Just typing Hot Forex. You can download it. We're upgrading it all the time. There's always new revisions coming out. So allows you to trade from your app, from your phone as well. So download the app, certainly. Any feedback, Calvin, would much appreciated as well. Good afternoon, Osvaldo. I'm guessing you're, I don't know where you are. I'm guessing you're obviously a Spanish speaker, I guess, from Como. Good afternoon. Conches, also good afternoon to you, my friend, or good morning, or wherever you are in the world. So let's have a look. This data's coming across here. So hopefully you can see that. I'm going to zoom that up. I don't know if I can zoom it up anymore, but where are we? So PCE, personal income, it's come in, it's missed at 0.3 of 1% compared to 0.5, 5.8 for the PCE, the year on year. So it's less than expected, but it's higher than last time. So it's gone up, but it hasn't gone up as much as expected. Here, personal consumption for the month is 0.41%, but year on year it's coming at 5.8%, 0.5 of 1% for the entire month. And the expenditures core has come in at 4.9%. So that's higher than expected. The PCE year on year is lower than expected, and we have employment costs 1% less than expected as well. So that's mixed numbers there. Mixed numbers there as far as the Fed is concerned. But obviously the Fed has already had its say this week, and we've moved on the dollar accordingly. So anything you want to have a look at with regard to the chart, guys, let me know, and we'll have a look at it. But let's kick off with yesterday's big news, which was the big move down we had in Tesla here. Gave up that $900 handle. This is Tesla on the daily time frame. Big move down. Next key support is this level here at 780. Through that gap we had here as well when we gapped up. Big Fibonacci extensions here on the Tesla daily chart, but big, huge move down yesterday. Possibly, lightly, the market moves up today. Some rebound from that, but those two big gaps there you can see here and here back in October, beginning of October, end of October, have all been filled. So we'll come down to a key level here at 830. 780 is the next line on my chart here. So let's have a look. So first request has come from Usama about, Yamish is saying gold, and Usma is also saying gold as well. So let's just do these in order. So gold and silver is first up today. So let's have a look. Let's just get out of that. Actually, let me just have a quick check on the how the dollar has reacted to that PCE number. So here you can see this is a 15-minute chart here of the dollar index. So dollars weakened significantly on that mixed PCE number as well. So it's coming less than expected. Say we're down to 97.23, but overall dollars very bid this week. This is the daily chart for dollar index. You can see here on this chart here we've sort of broken out. I'm not sort of broken out. We've broken out of this level here, 96.64 from that sort of top, that channel we had during December. Let me just put that through there. So we're in this sort of channel in December from 96 to 96.65. We broke out of that yesterday, so we need to hold that. So that now becomes a support area. And then above that is this line here we got here at 96.92. So 97 for the dollar is a key. Dollar index is a key round number. It's a key psychological level. And we'll see how the dollar finishes the week, but certainly it's been a strong week for the dollar index. Sama's asking about gold, so just bear with me. I'll just get to a different profile. That's my default chart. So there's my default chart. So just bear with me a second, guys, and we'll go through these. Okay, so silver and gold. Mohammed, I'll come to your question in a minute. Let's just go through gold and silver. Gold's had a right old rock and roll week. I don't know what time frame you're trading this on, Osama, but certainly where's gold? Here it is. This is the hourly chart from Wednesday's high here when we went over 1850 on Tuesday. Tuesday's close over 1850. Key level for gold, 1850. We couldn't hold it, and we've descended very aggressively. The Fed's announcement here on Wednesday, we weakened Wednesday quite significantly, but the Fed announcement weakened gold even further through the 1850 level, which is a key line, and now here we are under 1800 to end the week. So we had quite a bullish start to the week for gold here. So we were edging up last week. This is Friday. We were down Friday, but we had a strong start Monday and Tuesday. We went over that 1850 Z, but huge sell-off. Big engulfing candle taking out those 4.5 days of gains over 1850. Breached 1850 yesterday, as I said, on the daily candle. Breached this trend line. It had just been set or was just holding quite nicely. Looked like we were moving up from our January lows here at 1782, and here we are at the end of the week below our January low. So new January lows, intraday January lows are being printed for gold at the moment. We're trading currently at 18. I can't see that. Can I zoom up a bit? We're currently trading at 1885 by the looks of things. Next support is the big psychological 1770. Remember, we talked about that a lot during the second half and the end of 2021. So 1770, the big end of day support for gold, but three big down candles so far this week for Wednesday, Thursday. Obviously, we can't decide anything on Friday because it's still not completed, but certainly we look at the 4-hour chart, that'll be very much to the downside. There we go, 4-hour break, and it's 21 EMA. This simple crossing strategy we have here under the 50 period moving average as well here on the Wednesday, and we've just moved further low all week, so that's trending lower. 4-hour traders are short. 1-hour traders have been short as well, and just trend following that down since Wednesday. And certainly the end of day trader would have got short here, or certainly closed out his long. Depends when he got long there on Wednesday's big shakeout. So gold is airing to the downside. By my Sama, let's have a look. Where am I? Let's make sure I keep that's where we are. Got my hot forex cup, guys. It's got herbal tea in there. Nothing too naughty for a Friday afternoon. So where were we? So gold's down, Osama. Manish is asking about silver as well. I've now got silver on here, but let me just go to a different profile, which I know has the commodities, which has silver on. Silver. Remember with silver and gold, they're both precious metals, but silver has the added advantage of being an industrial metal as well. So industrial news can affect silver as well. So here you can see similar sort of move. Here, this is a daily chart on silver, and we're into 1, 2, 3, 4, 5, into our 6th consecutive down candle, spike up to 24.50 on 24.85. In fact, we went to intraday last week for a January high, and again, our January low is down here at 21.87, Manish, and that is very much down. Big down break yesterday under the 21-day EMA. So again, the 4-hour will have triggered earlier. 4-hour went short here on whenever that was, the 24th at 1600 hours sideways. Another leg down yesterday and today. So 4 hours moving down, and 1 hour will be the same. One would assume. There we go. Obviously trekking lower, and the 1 hour bit more choppy, but certainly topped out at 24.86 here on the 20th, and it's been moving lower ever since, testing that 20-hour bit over there. Very weak sort of move here, and then this is clearly the there we go. There's Wednesday, and the Fed at 2100 hours here on the zoom it up. 2100 hours here on Wednesday. That not a huge candle for silver, but it was certainly adding to the momentum, and it's just drifted. Well, no, moved nicely lower yesterday, found a bit of support, bounced off that, sideways into close yesterday, sideways this morning in the European and the Asian session, down to currently day lows at 22.40, and we've bounced off that in this current hour, but again, it remains to the downside, and resistance is at 21 EMA at 22.70 to the upside. Manish, I hope that's answered your question. Jake, Jacka, you're awesome, my friend, as well. We're all awesome. We've all survived this hideous 2 years, so we're all awesome. We've come out the other side. Mohammed, how are you, dear? I was asking about long euro will go down against US dollar. Remember what we've had this week, guys. We've had this, let me just... question's a bit long there, Mohammed. You can't see me, so let me just bring this up. Remember what you're asking there, Mohammed. Remember, we've had the world's most significant bank confirming its hawkishness, and it was more hawkish than the market was expecting. 3 big factors going on, remember, with the Fed now. They were talking about when they want to put interest rates up. He's more or less, he didn't actually say it, but he more or less confirmed that in March they will increase rates probably at 25 basis points at their March meeting. Again, central bankers don't say these things directly, but they intimate them and they talk around them. But he was very hawkish for Jay Powell. The other thing he did confirm was this big additional stimulus that the central banks around the world have had to give to their economies because of the pandemic. This additional buying is all going to come to an end. It will come to an end in March. That's clearly confirmed as well. And the other thing, which again he didn't really talk about much, and that's where I was really looking forward to, was this massive balance sheet, the balance sheet that they've built up over years since the big financial crash of 2008, 2009, 2007, all that Lehman moment when we had the latest or the last global financial crash. All of that stimulus, that's built up a huge balance sheet on their books. So they need to start but paring that down, and there wasn't really much confirmation of when that might start or how quickly that will go, but there was an indication that that's going to happen quicker. So that's all supporting the US dollar, all of that talk, and it undermines treasuries, so therefore yields go higher, and that's why we've had this big move in stock markets as well, because it undermines risk a wee bit as well. It takes the risk off the market. So there we go. Next week, we've got the ECB and the Bank of England. The expectation is that the Bank of England will move at least 25 basis points on the 3rd. And the ECB, I read an article, they're not going to move interest rates up at any time soon, but I read an article at the beginning of the week where they're saying, well, possibly now, it could be December 2022 when the ECB finally starts to move interest rates up. So even the ECB are getting hawkish, but there's a big difference at the moment between what the Fed are doing and saying compared to what the ECB are saying. So hence this, I think it was a 7-month low we got on the euro, haven't we? So euro's under pressure because of the stronger dollar, principally. Euro had a goodish week against the pound, then it's rolled over quite significantly. It went to 84, and it's come back down really quite aggressively. So if I get rid of your question, Mohammed, and we look at the euro, where's the euro here? Let me just find the euro. Right, just get rid of me for a minute. I can leave your questions on there. I think, Mohammed, just can't see me, that's all. So if we go to the euro, you can see it's had a hell of a week. This is going all the way back to the 18th of January. We're up here at 114. So 114's gone, 113's gone. Zoom in a bit, obviously closer to the action. This is the 1 hour. This is Wednesday, the big line, this last line here, the big down candle for the euro, but it was already weak, wasn't it? We couldn't get over 113 early Wednesday, moving lower, big leg lower here, broken that low from Tuesday, Wednesday low on the announcement from the Fed, and then we just tracked lower very significantly yesterday. And a bit like here, we flattened out, a bit like that last chart we looked at, flat into close after a big down day in the Asian session, flat in the Asian session, a bit of pickup in early European trades this morning, and then down, testing new lows, 11.25 tested. Look at this, 11.25, big round number. Remember, 5s and 0s, lots of stop losses, lots of take profits at these round numbers. It's just the way the human mind works and the way the robots work as well. So look at this, 1, 2, 3, 4, 5, 6 hours today, down here, testing 111.25. Everybody's had enough, selling, and bang, we've had a move up on the key news of the day, the PCE being worse, or not as, inflation not as bad as perhaps expected, and here we are, 111.60, and we've spiked up quite significantly. So let's see, sorry, I was looking at something else there. I was looking at some pre-market prices, sorry. Hamid, so euro remains very weak. All eyes now really, euro and pound for the Bank of England and the ECB on our Thursday. So not Super Thursday, but certainly will be a particularly interesting Thursday. So, Unfight you, looking at cable. So let's have a look at cable. So let's have a look. Have I got everybody? Andrew's just saying, yes, I've got Facebook and YouTube questions here, so I can see everybody's question. That's good. So who's this? Unfight was asking about cable. So again, cable moving down, but see the big reaction to that, weaker than I expected. PCE number. Kashkari's just come out, one of the main doves actually on the Fed, saying rates need to rise a little bit. So Kashkari, the head of the Minneapolis Fed, has just said rates need to rise a little bit. And Kashkari is one of the biggest doves on the Fed. So if he's saying rates need to rise a little bit, that looks like that's nailed on for March, to be honest. But certainly the PCE number was... actually was not as bad as, or not as pushy as one might have expected. The core, as I said, at 4.9% versus at 4.8%. So inflation is still around, but some of the detail in there perhaps wasn't as hot as many as had expected. But sterling here against, let me just go back to, where am I here? Question here. Sterling's been weak. Again, another one that's gone to a key level, 133.63. from yesterday was tested again today. We've bounced off that quite significantly. That's looking like a very strong candle. Still 15 minutes of that candle to close, but just like we went down very strongly here on Wednesday, interesting to see it's from rejecting 135, similar size candle, isn't it? Post Fed. Let's zoom this up a bit. There we go. Post Fed on Wednesday. We're having a bit of a bounce today post PCE. So next, if this breaks and holds, obviously we're going to put in a high of the day potentially. I mean, all that may collapse in the last 15 minutes, but the MACD signal line started to move up. We're still under zero. Histograms are getting shorter. Big spike up there in the RSI. It's still at 56, not doing very much. But we're over 134 again. That's 134.10, that line there, the pink line. It's not 134 itself, but 134.70. So that's looking relatively positive at the moment. But overall, you can see on the 4-hour time frame, still a weak one. The 21 EMA for 4-hour traders sits there at 134.45. So that needs to break into the end of day if sterling's going to move up from here ahead of the Bank of England on Thursday. But interestingly, there we go. We got the golden line here is the 200 moving average for this 4-hour chart, and the 21 moving average crossed it here yesterday. Was it yesterday? Yeah, yesterday at this time. So that's a negative setup as well. So that's still weak. Obviously, that support, the one we just said, is at 133.60 zone. Resistance for 4-hour trades at 134.45, so it's still to the downside, and the daily will still be negative, although we've got a bounce today. So again, big rollover from that move to 137.50 at the beginning, in the middle of January, when we'd had a nice run up from the middle of December to the 200-day moving average, much more significant, or the most significant moving average people look at. A bit of a tweezer top setup as well that day. But didn't break the 21 moving average until earlier this week on the 24th, but we've been lower since then as well. So sterling still in the downside as far as the January is concerned, and obviously January closes out on Monday, so still to the downside on the daily time frame. I don't know what time frame you're trading. Booking asks about euro dollar. We've got euro kiwi, and then dollar yen. There's nothing else after that. Any questions open? So excuse me, 1 second. Euro, Bokang. We just done euro, but let's do it again. You can see let's go up to the higher time frame. So it's been down all week. Again, I don't know what time frame you're trading this, but intraday have been quite interesting. The 15-minute would have had a tanking candle. Indeed, it has. So again, sideways into the news, big old candle there, new high of the day. That should be moving up. 5-minute was even more exciting. Sideways action, out of the channel, in the channel, out of the channel, and a big break up to the upside. So if we go to the 4-hour, our first resistance for 4-hour trade is all the way up here still low. That 21 on the 4 hours, 112.13. So below that will be 113. You could probably actually, 4-hour traders could probably start to be putting on their little Fibonacci levels here. We've sort of looks like that's set that level. So your key level is at 23.6 for 4-hour traders, just ahead of the 21 EMA. So there's a zone there at 112.13, and the 23 first level on the Fibonacci level sits there at 112.05. So 112 psychologically is a huge number. But first today, we really need to get over that 9-period EMA as well at 111.66. So 111.66, 112, and this support zone here to the upside. So look at the 1 hour time frame, see what that Fibonacci level looks like. Yeah, see, it's still way away. So it's still weak. We've got a strong hour now. That might all peter out. Obviously, we've got the US Open still 40 minutes away, but it's looking quite a good candle. Certainly would have taken some of these shorts out from Wednesday. If you've been short this from when it broke the 20-hour moving average here earlier on Wednesday, you've been short Wednesday, Thursday, all of Friday, and might be a time to be closing that out now. But you've had lots of pips in the bag on euro. As far as the daily time frame is concerned, but you can see it's still that Fibonacci level is not relevant because they're still going down, so that doesn't count because it hasn't flattened out, it hasn't retraced. So that's still very much in the down leg. And as you can see here, well, you can't see here because it's very messy now because this is the 1 hour. You can see if we look to if we zoom this in, you can see from a daily point of view, we haven't been down here. When we were last down here on a daily point of view, it's gone right off the chart, isn't it? We're all the way back to July 2020 lows. So if I zoom this back in now, so this is our daily, remember, big move down from the middle of January the 14th now for the euro. If we go up to the weekly, see what a huge week we've had. Let's take that Fibonacci level off for you 4 hour trades. I'm sure you can put that on yourselves, guys, can't you? Just take that off. Delete that one. Okay. Yeah, so here you can see, it's much clearer now, isn't it? If we look to the left, we go all the way back here to May 2020. That's where euro dollar's trading at the moment. Just because we have a big down week doesn't mean we can't go any lower. Obviously, it's a lot of fresh air under here. We've been, as far as the weekly chart's concerned, that triggered lower here using the same parameters, the same 20 moving average. That went weak here back in June, and it hasn't looked back since, has it? It's been under its 20-week moving average since June 2020. And here we are back to week here of May 2021, I should say. June 2021, the weekly traders have been short euro dollar, and we're going back now to May 2020 for the low that euro's been. And see, that was 3 strong weeks on the way up. So as we went up quite strongly, so we could go down quite strongly. And the next support at those higher weekly timeframes is really this support here through the late spring and early summer of 2020 when we went down to 108. Okay, might sound a long way away, and it is indeed a long way away, but that's where the next weekly support sits, or any strong support down there at 108 for euro traders on this higher end time frame. So the trade, the higher time frames, is my point, is really much to the downside. Euro, a kiwi, a lecky. Not one I look at very often, but let's have a look at the euro for lecky. Where's my euros? Euro, kiwi. Kiwi's been weak this week. Euro's been a bit mixed. Obviously, we got the ECB principally driving things for next week. So where are we? So we've broken 168. We've held 168. I think we're over 169, and we're over 170 at the moment. Let's put that key line. So 1.70 is basically just below where we are at the moment. There we are. So 170 today. Rallied into it yesterday. Bounced right off it. 100 odd pips move. And then we've retraced half of it into close yesterday. And then we've broken back to 170 and through 170. So that looks relatively strong today. Lecky, I don't know what time frame you're trading this one on, but it's a really nice trending mover. So you've been up, you've been short. We went long here. I don't know what your strategy is, but that for this strategy, it would have went long here yesterday at about 7-8. What time's that? That's 7 o'clock last night. You might have got stopped out there, but could have got back in here this morning, broken over the high from yesterday. The trend is very much high, so that resistance there broke through that, retraced it a wee bit, but we broke through another high, and so that's continued to go through yesterday's high. A couple of hours ago, very volatile hour at the moment, but certainly we're over 170, and that's still moving high. So, Lecky, I don't know what time frame you're trading that, but if we go up the time frames now, the 4 hour again been angling higher from this test of .6675 from last week on the 18th and the 20th. That's been moving higher. So again, as I say, through 68, through 69, and through 170 to the upside for 4 hour. And the daily time frame that again broke out of this channel here. That's 166.75. Level here at the beginning of January. This is December here, guys. The daily. So again, we had that December high at 168, which we breached here on was it only just this week? It was before this week. The 21st. So last Friday, breaking out last Friday. Nice candle. Look at that one, and we followed through since there. So look at that test. So 1, 2, 3, 4, dipped away 5, 6, 7 days testing that key 1.68 level, the December high. The intraday high was a bit higher. We tested it in the 1 day, and then finally big breakout candle here on the 21st, and we've been higher ever since. So breakout would have been the 21st. Yeah, again, I don't know how you're trading that. That would have gone, certainly that's your breakout there, but this would have triggered long initially for a small entry there on the 6th of January. Breakout would have added to your position, certainly on that, sort of held it there. It's been over the 9-period EMA all the time through the middle of January, and then added to your position now on the 21st, and it's moved up. And perhaps a tentative addition here, as we've broken this high here on the chart, takes us all the way back to September. So a new September high. We're over 170 as well. So perhaps a tentative addition today as well. But that's trending higher. Euro, Kiwi, Lecky, my friend. On the other hand, Romaine, dollar yen is also another one that's trading higher. I haven't got dollar yen here. Let's go back to my... actually, let's look at the dollar crosses, because I've got the $3 crosses here. The dollar Swiss, dollar yen, and dollar CAD here. So this is on the daily time frame. So if we look at, it's less lines on this one, but anyway, you get the point here. Sort of sideways, really meandering through 114 for October, November, December. Really, obviously quite a big range we had in November. Big sell-off towards the end of November there as we went that 2021 high at 115.35, which we've just smashed through, or went back to test yesterday, in fact. And so key level again. So see how we went to test it yesterday with this 115.30. So 115 now is a key. I mean, you could give it up very, very quickly, given that we meandered through 114 for so long. See how that went on? That's October. This is November. That's December. But that's, some key lines now for yen traders, dollar yen traders. We got 116.34, our high here in the first week of January. 114 is very much, resistance for most of December. Broke through, now is support for January. So resistance for December, meandering up and down it during November, having rallied up in September and October to that 114 level. Look for some direction. 116.35, 115 is now our support, and we now trade at 115.34. So interestingly, testing that November high again today. So we want to, if we finish above this 2021 high again, it's one of those psychological things, and lots of systems we program for the year highs and things. So 1540 key level, a nice break, a few more pips above here, 1550, 1560 sort of close today will be a positive for dollar against the yen. But you see we've had a very strong week on the back of the Fed hawkishness here, Wednesday, Thursday and Friday, running out of steam a wee bit. Obviously upside is at 116.35, support is 114, but before that 115 itself is all 40 pips below that. So some key levels remain for dollar yen. Jordan, awesome yourself, my friend. Addy, good afternoon, good evening. You should be getting some rest, mate. It's Friday night. Take care. Thanks for all you've done every single week, Addy, my friend. I'll say that publicly here. So nice picture as well. Is that a dove? Nice one. Who's next? Good afternoon. Good evening. Hope you're well. Staying safe. Deborah says, okay, I don't know what that... You're speaking to somebody else, Deborah, I guess, or you're answering somebody else. Actually, sorry, I missed somebody out. Sorry. I missed out Muzammil asking about gold. We did gold earlier, Muzammil, but I'm happy to go back to it. Excuse me. It's had a right old week, gold. I don't know what time frame you're trading it on, but let's have a look at the commodities section here. So this is silver we finished with. Oops. Get rid of that. Where am I? Gold weekly. That's gold weekly. There we go. Channel bound. Down week so far this week. Let's go down the time frame. So data, as you can see, there we go. It's obviously the week. I mean, you trade gold weekly, but you can see this is the daily. So we've had a very strong reaction to the Fed on Wednesday, Osmill. We went all the way up here on Tuesday to 1850, having had a strong start to the week, certainly, but that didn't hold, and we've moved down very significantly. As I said earlier, you obviously weren't here, we're now punching today, we're pressing January lows here. You can see there 17, here was the low, intraday low there on my chart here at 1782.48, so 1782.50, and we've been under that already today, as you can see that. So very strong reaction to the Fed. Gold's turned negative again, but as you can see on the weekly chart, let's go back to where we started this one. It's not doing much anyway. 1850 is a key resistance. 1770 is the big fat support from December, and on the weekly chart that goes down to 1750. So it's in a relatively sort of, I know it's $100, thousands of pips, but it's in a relatively sort of boring range for most of 2021, to be honest. So at the moment, three big down candles. This is three black crows on the old candle set up here on the daily. But the key thing is where we close today. If we close below this low for January, that would be significant. Remember, we've only got one more trading day of January to go on Monday. So gold looks weak. And again, I don't know how you're trading this, but the daily's down. So that's your downtrend. The 4-hour will certainly be down, obviously, from Wednesday, in particular from that rejection of 1850. Couldn't quite get to it here last week. Got to it here on Tuesday. And then just, big rejection there as the Fed announced this hawkishness tilt. The 4 till 8 hour. In fact, that was before the Fed actually said anything on Wednesday. So it's, heads up gold was ahead of that, and it's moved down quite significantly ever since there. So 4 hours down, the daily's down. The 1 hour is still down. It's still under its 21 EMA. The resistance now today sits at 1794.68. So you really need to get over that on the close of for this to go up. But at the moment, that's still trending down. You're still short that. I say the day low at 1780, 1779.92. So we've gone under 1780 is a key level because that's a new January intraday low. Bounced off that a wee bit in the last couple of hours, but that's still moving lower. On the daily time, let's go back to the daily. I've got this says 1767, but for the sake of $3, you can see that 1770 is a key support level here from this December low here. Deborah and Usmil, because Deborah was asking about gold as well. There we go, Deborah. So 1770 key support level, and we've already been today as low as under 1780. So down to the downside. Manish, what possibilities pound USD to go up? When people ask this, Manish, it usually means that you've got a long trade already open and you're hoping for it to go up. I don't know. I might be putting words in your mouth, but there's always a possibility. That's the thing with trading, guys. Trading is probabilities. Trading is possibilities. Anything can happen. We didn't know. Obviously, the big news today. Let's go back to. Where are we? Let's go back to default. Let's go back to cable, which is what Manish was asking about. Anything's possible, friends. Remember, anything's possible with trading. That's the whole point. But you need have a strategy, have a system, follow your system, all that stuff I say all the time. But yeah, of course there is. But at the moment, this is on the daily time frame, Manish. So you tell me, what's that trend doing? Having been up really nicely from the middle of December, from this big support here at 132, we went all the way to 137.50. That's 550 pips on cable, all the way to the upside. 137.50 turned around quite significantly, moved down, and again here, under its 20-day moving average, finally for the first time in many days here on the 24th. So it's been over it, broke it here on the 22nd. So virtually a month over that 20-day moving average. Long. That would have taken you out. Again, if you're using this strategy, like option 2 as we call it, where you get out on the break of the middle moving average, you would have been long from here, down here, and you would have got out here at around about 136 on this day here, and then gone short again, following the rules strictly, you would have gone short here on the 24th as it went under 135, and you've been short for 1, 2, 3, 4 days so far, and it's still moving down. MACD's looking really iffy, isn't it? Looking to look at there's MACD, the MACD there. Look at the histogram today; it's negligible. Okay, so trended up quite nicely, broke the zero line here on the first. Yeah, that's moved up. RSI still moving down. RSI at 42. It's not great. It's ticked up a wee bit on today, but still looking weak. That's still trending lower. That's trending lower. 133.65 is the support from yesterday. We bounced off that today, but that's still moving down. But yes, there's a possibility it's moved in, and it can move up. But again, technically, price action, your big line in the sand is at 135 level there, and we're still 100 odd pips away from. Where are we now? We're 134. 22, so we're 80 pips away from the big psychological 135 to say there's any movement up there on a day basis. But again, I don't know how you're trading this, Manish, and what time frames you're trading, but certainly the day is down. Let's have a look at the weekly time frame. So it's a bit messy this because there's a 1 hour chart. So there we are. That's a bit more clear, isn't it? That rise from the descend through the summer, basically. That takes all the way down June, that big down week, and then we've moved down into 132, and then 4 consecutive weeks higher, and here we are into our second consecutive week down. But as you can see, the down, it's not strictly true, the down candles aren't as big as the up candles actually, but it's quite a significant down candle so far this week, isn't it? So cable down, it can go obviously up, but again, here on the higher time frame, Manish, the signal line is weak. It's flattened out a wee bit. Histograms are still down. There's still a bit of fresh air between the histogram and the signal line. RSI here on the 14 period is at 44 and moving down. So, if I'd gone short last week, I wouldn't be looking to close my short out if I was an end of week trader. Certainly, that's for sure. Okay, so looks down. Addy, have a great weekend yourself, my friend, as well. And we'll see you all on Monday. Guys. Mantine, hello, sir. Please do a webinar on how to read the COT report and how to apply for our trading analysis. Thank you. Martine, there is a webinar. I've done a webinar. I'll do it. The February webinars are already set, but I might do one here on Facebook if you like, a live one. But if we go to our website, guys, you can see this. Yeah, if you go to our website, you can see that if you go to our live webinars here, you can see, obviously they're all in lots of different languages, our webinars, but our English language ones, Mantine, these are the ones that are coming up in February. There's nothing actually about the COT report. Obviously, it comes out, it's very significant, it comes out every Friday, you're absolutely right. But I have done them in the past. So if you go to here, our past webinars, you'll see a recording of it down here. And I hope it's not going to prove me wrong. I haven't looked on here for a while. So these are our recent ones. So every time we do one, it gets recorded here. You can watch it or listen to the webinar. These two haven't had the audio channels put up, the stochastic one and the Fibonacci from last week. But let me just find how to trade the COT report because it's definitely on here. It certainly was the last time I looked. And doing this live, it's always going to prove me wrong, isn't it? Where are we? Oh, come along. Where is it? How to trade the Dow, CCI. Where's the COT report? TPO. That was a popular one as well. TPO profiles. I haven't done that for a while, so I might do that again. Where's the COT report gone? Fibonacci, scalpers. Anybody seen the COT report on here? Mantine, it is on here. Trust me, it is on here. He says confidently, but you can't see it. Gaps, harmonics, the MFI, the RSI. Where's the COT report gone? Swing trading, parts 1 and 2. Scalp trading, doing scalping next week. Candlestick patterns. Where's COT report? I'm going to have to speak to my marketing guys and my web guys. It's not on here for some reason. Anyway, if you go to our YouTube channel, see me in stereo. Our YouTube channel. There he is. That's me. It should be on here. These are all our webinars, but certainly I'm determined to find it now because it should be on here. The COT report. Is it a basic one? Mantine, I will definitely put your email on. I don't, you obviously don't want to share your email with everyone. I'll find you, Mantine, but I'll send you the link to the. It's proving me wrong, isn't it? I can't find it now. But there are definitely, we've done webinars on the COT report, and it should be here. But for some reason, I can't find it today. It's always the same, isn't it, when you're live saying something and our website is proving me a lie. Honestly, it is on here. You never trust anybody who says honestly, do you? So, but it is here. Honestly, it really is the COT report. So, Mantine, I'll certainly do that. I'll find it and I'll find you and I'll certainly send it to you. Okay. Hope that's answered your question. What indicators are you using? Says Surin. Well, on this particular setup, Surin, that's a bit messy, isn't it? Let's go down to the 1 hour and tidy up. There we go. The moving averages here, the pink line here, or the magenta line, is the 21 exponential moving average. That's the 21 EMA. The yellow line is the 9-period EMA. And the blue line, the light blue line there, is the 5-period EMA. So I've got three moving averages, 21, 9, and 5. And basically this strategy is a two-step strategy. And it basically, your first suggestion that things are going to move is when the 5 and the 9 EMA cross. So back up here, for instance, on this particular... do I want to... No, let's just get that. So here, we see we're going sideways. So the thing with moving averages, obviously the big criticism is that they're lagging and they're late and all of that. That's absolutely correct, okay? You do get false signals. So here, we were flat. So what you'd really want is an angle on the moving averages and some sort of air between them. And what do I mean by that? Well, here you can see here where it's crossed here, the moving averages are flat. So it's not a great indicator. What time was that? You know, it's 6 o'clock, and it's sort of 6 o'clock our time. It's 4 o'clock. It's the London fix. There's a little bit of movement in it, but it's a very weak move up, and then it's moved it out and it's shorted out. That here, whenever this was, this is Wednesday, so obviously you wouldn't really be trading this on an hourly basis ahead of the Fed. So you wait for the Fed to announce. The Fed announced at 9 o'clock. This is the 9 o'clock candle. So an hour later, after the announcements come out, why probably Jay Powell is still talking. I think he was still talking at 10 o'clock. That's a big down candle. So that would have triggered definitely a short position there because the moving average is there. The blue line is crossed under the 9. Then the candle has closed under the 21 as well. So in fact, it's actually gone short there the hour before. But whether you would have had the wherewithal to take that short ahead of the biggest announcement of the month, one would... that's a bit of a risky trade, but certainly it followed through very nicely. Your stop loss would be up here at the top of the turn. Let's zoom this in. The turn of the market, that's what we say. Or you can either count candles back, 2, 3, 5 candles back, depends where you want to go. But really, the turn in the market is what I always talk about. And, being such a volatile day, you would have had it above this announcement there at 135.25, something like that, 135.70. But anyway, basically, so that's still short. And there's different ways of trading this. You can either use the ATR, which I really like, which is this lower, I don't know if you can see it, Surin, but it's this lowest indicator down here, the ATR. I don't know if you can see there. And you use a multiple of the ATR. So when that triggered, it's actually, if a robot was trading this, perish the thought, it would have triggered short here. And the ATR on that hour candle there was about 14 pips. So you'd have been looking to try and get about 3 times that ATR. So 3 times 14 is, what's that? 42, isn't it? So you'd be looking for 42 pips from 135. So you'd be looking at about 160. And you would have got that in the next hour if you'd wanted to close out. The other way to do it is just stay short and trend down. This is exactly what's happened. This is why this is such a great trend following strategy when it works. Obviously, it doesn't work all the time. So that would have been, if that was your entry, you would have still been short, as I said earlier, until the candle closes or stops you out. So as we go down here, your stop loss is back here. So your stop loss is here at this point. There's that candle. Then we move down a big leg. So if your stop loss is still up here, so you can't counting back, say, 3 candles. By the time we get to here, and you're counting back 3 candles. The high of the last 3 candles is 1, 2, 3. So your stop loss is still here. It might have taken you out. By the time you get to there, 1, 2, 3, you're getting stopped out around about here. The other way of doing it, instead of just moving the stop loss down, is just watch it, come back every hour, or every 4 hours, or every day, depending on how you're trading it, and wait until the candle closes back above the middle moving average, which is the yellow line, the 9-period moving average. So this one, it's got a big strong trend here. You would have got in here, and you would have got out here, where that candle there is closed for this particular time frame over the middle moving average, and it's gone. You've closed your short position. Okay, and as you can see, if you're following this, you would have gone long here at 6 o'clock this morning, and it hasn't worked out, has it? Because your stop loss is back here, and you'd have been stopped out for a losing trade. So you'd gone long there, went up, then it went down, then it closed out. So if you'd been either way you'd been doing this, it would have been a losing trade. If your stop loss had been there, 3 candles behind where you got in, you'd have got stopped out. You'd have got stopped out on this, or you would have closed your trade there on that candle for a loss, and then you would have gone. It would have reversed and gone short as well. But as you can see here, the moving average has flattened, and then it's moved down, and that hasn't worked out either, has it? So we've lost 2 short positions. But again, would you have traded it knowing this big news was coming? Who knows? Possibly, if you were just taking them all. But that would have been losing trade because, again, if you'd been using that, you'd have a big losing trade in there. That would have been a big pip loss there on strictly following that huge number. But you knew this was the big, again, that's the issue with trading intraday. You trade the big news. That's the big news from Wednesday that's moved the candle. The next big news of the week has been this PCE number. And again, that's moved the market. So from a downtrend, perhaps it's going to close out. But again, it's Friday. It's the end of the week. The close of London. Remember, London's the most significant of the financial forex markets. Is out. So yeah, it's just following rules, Surin. So basically, this is a crossing EMA strategy using the ATR. Watch there's a whole webinar on a whole hour. I talk about how to use the crossing EMA strategy, but I spent some time with you because I think that was the last question we got. Yeah, so 21 EMA, 9-period EMA, 5-period EMA. This is the MACD set at default, ATR set at default 14, and also on here is the RSI, one of my favourite oscillators, along with the, can't see that, isn't it? Oh, dearie me. And there's our RSI at 14 as well. So they're the 3 oscillators and indicators are on the bottom of the chart. Okay. Oh, and the brown line as well is the key 200 period moving average as well on there. You could add the 50 as well if you like. It's too much, gets a bit complicated. Okay, so there we go. Right, it's 10 minutes to USO. Let's just have a look at what else is going on today. We had, as I said earlier, we had some massive moves in the stock markets. Apple blockbuster earnings last night, 123 billion. For their first quarter. Everybody's calling it Apple's first quarter, but it's the fourth quarter earnings, the Christmas quarter. And they closed down in the session yesterday before the markets came out. They're up 4-5% after hours. They're currently trading up 3.25% at 164.50 at the moment, pre-market, looking for quite a strong start. Other markets that are moving quite well this morning, US time. Some active markets at the moment. AMD's active at the moment. Oh, it certainly was yesterday. Ford was off again. Yes, Ford's been very volatile. Some of the bigger companies, Lucid, the electric car companies, on the back of the huge loss we had in Tesla yesterday, 11.55% loss for Tesla yesterday. I mentioned earlier at the beginning, Robinhood was off 6.45% in the close. Carnival Corporation, the cruise company, 5.82% down. Pfizer was up yesterday, 1.4%. Microsoft bounced 1% as well yesterday. AMC off 8.9%. So some massive volatile moves in the US markets as well, obviously in all equity markets, but certainly it's been a very interesting week. And as I say, let's just go back to some of the stocks. Some of the stocks we had. We started the session today having a look at Tesla's big sell-off. Just bear with me a second. It's a dollar index. So Tesla. Tesla's huge sell-off yesterday. Whoops, where are we going? Let's move that back. You can see how it's green on black. So excuse me. So massive sell-off yesterday. If I go to the daily time frame, you can see this huge down candle yesterday. But broke the key 1,000 level earlier in the month. We had been as high as 1,200 as we closed out the year, started the new year, but Tesla sold off really aggressively since then. Key gaps here have been filled this week. The gap there filled up, but then sold off yesterday. So that gap up and that gap up there, and next support is this level through here. Which takes us back to the beginning of October for any Tesla traders at 780. So 900 was given up yesterday. We're above 800. Let me just put $800 in here. It's not above. There's our. Let's put that in then, so I know it's there next time I come back. Get a thick line. So it's 8. Yeah, I don't know. Sure. There you go. So 800 is down here. So we close at 831. I'm not sure where we're trading Tesla pre-market, but obviously the markets are open in about 10 minutes or so. Tesla is currently down another 1%, so it's currently off another $9. We're at 820, so 831 we closed yesterday. We're down here at 820, off another 1% at the moment, having lost 11.55% yesterday on the announcement over the electric cars and electric batteries. That's pulled lots of other EV companies down as well. So very volatile stock, but Tesla remain the market leader. And we had a big re-ramping of shares last year, share split. So it's had a phenomenal run. I'm sure you're all aware, but it's moving down very aggressively at the moment as far as stocks are concerned. I say Apple. Here's the Apple end of day trade here. Yesterday we closed at 159.40. We're up 5% after market hours, but you can see there's a big support area here. It takes us down to 155 as our support. It's probably a wee bit early putting that. I think I'm putting that Fibonacci level in, to be honest. Sorry, no, it's not what I'm talking about. It was from this low here in October. So October, November, December high took us from this low down here at 135 all the way to 185, and now we've rolled over. So through the 50% retracement this week. Next support is 155, where the 61.8 Fibonacci level sits for Apple. But again, another one that's been nicely long, and that triggered short here, then stopped out, and then it went short again. So another one. Remember, the significance of Apple is whether you love them or hate them, they are the world's biggest company. And whether you're a part of the ecosystem or not, they're tradable like any other asset, and some people are arguing there's a bit of a head and shoulders setting up here as well. But certainly that's been short from the 13th of January, where at that, again, that's that Fibonacci level there, but 172.50, that last went short, and then that would have been added to. See what's happened there? It's broken that support there a couple of days later. Now it's broken this low, this dip to the 21 EMA, which we'd had in December, and they'll rally up here last week on the 19th, and that was also the next Fibonacci level at 38.2. Then we've legged lower, gapped lower, and now we're sort of testing and running through the 50-period Fibonacci level. So next support we've already tested intraday, certainly on Tuesday at 155, but say pre-market currently. Apple is trading back to 162, so a jump up at the moment. So see how that opens. I say in a few minutes when the cash market opens in the United States, up 3.5%. It's the low end of where it's been on pre-market trading, but generally markets are pressured at the moment. And interestingly, let's have a look at the VIX. The VIX this week, remember what the VIX is, guys? It's the fear index, as it's often known. And we had a right old week, big old volatility week. Another great one to trade, moves around an awful lot, but we've been all the way to 33 on the VIX. Remember, we went to 80 something, didn't we, at the height of the pandemic panic? So we're a long, long, long way down from that. But 33, lots of negativity flying about in the equity markets from a bit of complacency here when we went under 15, 14 here. Back in the middle of October and November, things were great down here at 14 and 16. Bit of a panic at the beginning of December. That was shook off as we had a strong end to 2021, as we often get with the equity markets. Steady old start for January, and then the panics kicked in. We obviously got the Ukraine-Russian issue adding to things this week. So big candles this week, big volatile candles, lots of range on the fear index. So we're currently trading at 28.20. And moving up rather than moving down. So issues there, my friend. So Jonah, good job, y'all. Thank you, Jonah, my friend. I think that's everyone. I think hopefully I've got everybody's questions. I don't know if I have. Let me just let's move that off there. That was my no. I've lost my. Have I lost? I'll close my Skype. So let's have a look. Everything's okay. Okay. There's no more queries. Have a look. Oh, I've got everything, I think, by the looks of things. So where was I? I was here. Right, so no more. There's another question. Deborah's just asked about, is there a seminar in Lagos on 19th of February? It's a good question, Deborah. Ask the guys in the Lagos Education Centre. I think there is certainly one coming up. Let's see if I can find it for you to confirm that. I'm not sure it's the answer, so let me see if I can find it for your events. If you go to our Facebook page or our event page, events, I think there's definitely events in Nigeria. When did you say 19? I can't sure. Let's have a look. I've just got the January ones here at the moment. Oh, they're going backwards. Indeed, there is. Yes, Saturday the 19th in Lagos. There is indeed. Yes, there is. Let me show you that. There we are. Saturday, 19th of February, our Facebook webinar, Deborah. So there we go. Join the team. Very good team in Lagos, headed by Abiola and his team, and some good analysts down there as well. Heritage is a very good guy, starting to work for us, starting to write some stuff for us here in head office as well. So give Heritage a shake and Abiola a shake of the hand. Deborah, look forward to seeing you there, my friend. So any more questions, guys? I'm going to hang on for a minute or two as the US market opens, see what fun and games we have today. Remember, yesterday was a huge, actually, let me bring in the USA 500. Huge day yesterday. Massive volatility. I don't know if you can see it. Let me zoom that up for you. Look at the range. This is the daily candle for the S&P 500. It's the futures, USA 500. Big volatility yesterday, but we closed, just under where we'd opened. Obviously, massive volatility on the 24th. Well, big move down through that key level. So again, another one, using the same metrics here. That yellow, I don't know what that yellow line is on there. What is that yellow line? Is that the 50? Yeah, that's the 50 moving average. Let me change the colours of that. It should be. Let's make it bright green so you can see it. Brightest green is that one, isn't it? There we go. So that's the 50-day moving average. And the 20-day moving average crossed from above to below that. That's negative here from this flat support here we'd had around the 4,700 level at the beginning of January, and that's just collapsed off. More importantly, let me just find another. Go back to my default profile. More importantly, the S&P 500 is now into its 6-day. I think it's its 6-day under the key 200-day moving average. If I just this one is what I want to show you. This is my key S&P 500 chart. So this is a big support area here through November and December, which we breached very, very significantly. Again, it's a big messy, so apologies, but here you see the same combination. This is the red line here is the 50-day moving, the 100-day moving average, and this pink line is the 21 exponential moving average on the daily. So that's crossed here. That's negative. The blue line is the 50-day moving average. So you see there we go. There's that 20 crossing the 50. Now the 20 has crossed the 100. We're under 4,700 quite significantly. This is the area we were sort of struggling to get above. We went as high above 4,800 at the beginning of January, but it's been very dismal since then, and we've sold off very aggressively. And as with all markets, I said this earlier in the week, we've moved up really significantly, but you can see how the sell-offs are much more aggressive than the actual moves up. So things move up slowly and off quickly. The key thing, though, this week has been this key line here, the 200-day moving average, massive technical level for many, many, many traders. And as you can see now, this week we've been under it all week. So 1, 2, 3, 4, 5, 6 days now into our 6th day below the key 200-day moving average, and that now sits ever further away. Really, we're at 4,435. Support is this level here, which takes us back to this intraday spikes we had for another week here. This takes us all the way back to end of September. This is September. That's the month of October, I should say. So at the end of September, this week low we had here, which takes us into this 42665 level. And as we've seen this week, we spiked below that. So the weekly low now, from that tremendous volatility we had on Monday, when we went down to 4,210, so 4,200 is now into play. And this line here, this 4,140 line, if we zoom this up, if we now move up to the weekly level, given that we're under the 200-day moving average for 6 days, we got up to the weekly level. You can see what's happened this week. We've actually breached the 50-week moving average. And what's the 50-week moving average? That's the annual. That's the yearly, isn't it? It's the yearly moving average. And at the moment, we're under that. So, we're really looking to get back to 4,350 to the upside to get back over that, if that's going to happen. But huge week last week and another negative week this week for our fourth, as you can see, fourth consecutive week to the downside for the S&P 500. If we go all the way back to the beginning, to the panic of the pandemic, we've been over the 50-week moving average since the May 2020. So May 2020, we mentioned it earlier on some other charts, being a key area. We went all the way down here, didn't we? April, March, to 2270 areas, but and then just rallied up really nicely. But you can see, even on the weekly chart, you can see what a huge week last week was. And this week is quite significant. Last week we broke the 20-week moving average, which we don't normally. Look how strong that break was last week. Tested there. I haven't done that since the uncertainty of the pandemic. So another weak week. And it's all to do with the combination of rising interest rates, a more hawkish central bank reaction than the market was expecting. So it's perhaps caught the market on a bit of a surprise. So the dollar's getting stronger. So the risk factors in equities have taken a bit of a hit. So let me just drill into the 5-minute chart, see how we've been. Well, this is the 5-minute S&P 500 futures. So we got down to 4,266 again today. Interestingly, where was this? This is 14.45, so a wee minute ago. Bounced up a wee bit. It's 5 minutes, but again, it's looking relatively weak. There's the news there. Weaker dollar, stronger stock markets, but then it's given it up, hasn't it? Here we are at open, and we're moving back down the other way. So markets look like they've opened more weakly. And got some losses back, but a bit of a flat open. I'm not quite sure what the cash market's done, but certainly the futures there is down, having bounced up, down again. So we've got to the hourly chart again, looks pretty weak to me to close the week out. Right, it's Friday, it's 4:30 for me here. US markets have just opened. There's no more comments, nobody there's no more requests for information or requests for anything. Have I missed anything? Anybody? One final request for markets? Deborah, Surin, anybody? Joanna? I don't know how many people are still here, to be honest. I can't see from here at the moment. May have all disappeared. Manish, anything? I hope I answered your gold question, my friend. So I'll give you 2 more minutes. Deborah, there's definitely the Get to Our Lagos webinar. I'm not sure where they're holding it, actually, the guys. Last one I was at there, I think it was in Radisson Blu, I think it was, in Lagos. No more questions? I'm going to go. Martine, sorry, I don't know if you're still here, but I'll dig up the COT report webinar. I don't know why I couldn't find it. And I'll find you, if I've got your email address, I'll send it to you. If you're not a client, Mantine, send me an email at webinars@hotforex.com. Webinars@hotforex.com, and I'll send that to you at the moment. So actually, there is a question. Manish is saying, why is pound down? Well, dollar's up. Are you talking about generally or? Well, it's gone up today. It's to do with the stronger dollar, Manish. Again, I don't know what time when you say down. All right, you asked about this before, didn't you? This is not now. Or is it possible? You asked this earlier, Manish, and I answered you earlier, I think. What is there? There's always a possibility it will go. I don't know, you must have disappeared. But at the moment, pound is very much under the cosh. Here's the daily time frame. Look at this. We rejected 137.50 in the middle of January, and it's been short here on this crossing strategy, certainly for the last 6 days, 5 days, 1, 2, 3, 4, 5 days, down 133.65 is our support yesterday and today, so that's you want to look today. And it's been weak ever since. So the 4 hours weak, it's just trending lower. It's had a bit of a bounce off that 133.65, so that's a support for 4-hour traders. But if you're a trade in the 4-hour time frame, it needs to get back over the 20 period moving average for me, 134.45. 1-hour traders looks like they've closed out their short. They've been short since Wednesday, and the Fed that's closed out earlier. Got short, didn't work out, and that's looking like that's going to go long at the moment. So it's gone up, but that was such a big candle. It's cooled a wee bit at the moment, but certainly the 4-hour and the 1-hour, the 4-hour and the daily remain negative. So you're against the trend, even with the big candle we've had in the 1-hour time frame. So that MACD needs to get back over the zero line as well. MACD's rising, but a bit of a retrace at the moment. So Manish, it's pressure. Remember, key for sterling next week is the Bank of England reporting on on Thursday, along with the ECB. So that's really the top of the shop next week. So again, get on our analysis page. The week ahead is on there already, so have a look at that. Here we are. Have a look at that. Andrea's written the week ahead. This is me. Obviously, that's a video of what we're doing today. But the week ahead for next week, let's have a look at this. We'll finish with this, shall we? So it's really the Bank of England, ECB, and the RBA as well. So and obviously, it's the new month starts. The old month ends on Monday. We've got the new month starting. So first Friday of the month. This time next week, we'll be talking about obviously the non-farm payroll. Also starting this week is the Chinese New Year, so it's a big holiday in many Asian countries. I'm sure you guys in Asia are always looking forward to that, the Asian holiday. Year of the what is the year of? Is it the year of the cattle? I can't remember actually. Somebody tell me. Anybody knows the year? What the year is? The new Chinese New Year? I can't remember what it is. But basically, lots going on. GDP from the euro area on Monday. Many Asian markets are closed. Certainly, the Chinese markets are closed. The RBA decision overnight on Tuesday, Wednesday. The OPEC Plus meeting. So again, oil's been very much in focus. We haven't talked about oil today, but oil very much on the bid. Obviously, the geopolitical situation, particularly on the border of Ukraine, the eastern border of Ukraine, between the Russian army massing on one side and the West arming Ukraine on the other side. It's not a great situation. Lavrov and Blinken have met this week. Lavrov's still saying they're determined to demand that Ukraine never joins NATO, but it's more of an economic argument, really, than a military argument. But it's not looking great, is it? So, that could obviously throw markets out completely. Big impact on the energy market in Europe as well. But as far as the central bank's concerned, Thursday's the day. Bank of England and the ECB. Read what Andrew's got to say there about that. And Friday we finish with NFP and 250,000 new jobs expected next week. So Manish is saying, interesting. Manish is saying here, does Forex impact Elon Musk's tweet? Not normally, but certainly we get some volatility in markets. Obviously, the crypto market's been moved very significantly in some of the Elon Musk tweets. Obviously, these influencers can move markets very significantly, Manish, and so be careful what's going on. A bit like obviously when President Trump, Donald Trump, was in the White House. Obviously, he not only was he the president, but he had a lot to say on Twitter, didn't he? So that can move things. So not necessarily impacting the Forex market, Manish, but can obviously impact things like crypto and obviously the stock value of Tesla and other electric market companies that are in that sector if Musk sends something out outrageous. So there we go. Right, I'm going to call it a day. I'm going to finish here with the sterling. Actually, let's finish with euro, everybody's favourite currency pair. Currently trading at 111.55, up in the last hour since the PCE numbers, but we've been down since the Fed announcement on Wednesday, way under 113. Under 112, and we're currently trading at 111.54. So that's all for this week, my friends. Stay safe. I hope your family stays safe. Have a great weekend. We'll see you all again on Monday. We're back here again next week. And stay safe and all the best, everyone. Take care. Bye-bye.